Hello traders. I'm just going to do a quick update on my positions and something that I'm seeing in the market at the moment from the bar charts unusual options data. So just going over some of the my plays this week. So I did a couple of wheel plays, not many. Just some four stocks here: Verizon, Pfizer, and Kohl's and Kohler, HC, and then Intel. Um, so let's take a look at the market real quick this week. So basically, this week was not so bad. Um, so on Monday, we spiked up due to the coronavirus news, and then we kind of came back down a little bit. And see, right here, to me, we are gonna break out to the upside for this holiday season. So the holiday season is typically bullish, and that includes Thanksgiving, Black Friday, and the week after, and also the week going into Christmas and the week after Christmas. So those are traditionally bullish times for the market. So I believe overall we're going to be bullish. I believe we're just going to consolidate around here and then we're going to push higher. Um, so anyway, so this is the first week that I did options after the election. So I did, I was pretty conservative. Just did four options, no, four. I did options on four different stocks. Obviously you can do as many as you want. It's up to you. So I just did four stocks, just to test out the waters a little bit, and they all worked out pretty well. Expired worthless. And so next week I did around 14 stocks, and they're all doing pretty well because the market's doing pretty well. So, and as you can see, looking at the sectors, I'm fairly well diversified. I have a lot of consumer stuff, but it's not as I should have probably gotten a little more technology and financial to balance that out. But I kind of regard cyclical and non-cyclical consumers as different. Maybe they're not, maybe they are. So at least I'm pretty well diversified. And in terms of the uh, moving averages, so as you might recall from my previous video, I like to do options on stocks that are kind of within their moving average. This one is price over moving average, so 2% below, 3% above. So I'm kind of looking at that range, but obviously it's really difficult because the market is booming quite a bit at the moment. So I went up as high as like 5% or 6%, just to get something on the docket, because otherwise, you're going to be limited to four stocks or so, and they're, kind of garbage stocks. Um, so eBay, should have done some on eBay because this is the 200-day moving average, and eBay I consider it's a technology slash consumer stock or communication. I don't know what they. I don't know why they think it's a communication stock. That's kind of weird to me. But anyway, I mean it's an online retailer. Obviously, it's not tech, but it's like consumer, cyclical, non-cyclical, okay, whatever, communications. This 200-day moving average, this is a really good time to get in on it. Um, when it's kind of bouncing off of it, just playing the odds of it bouncing off there. You can, probably get really good premiums. In terms of deltas that I like, as you can see, a lot of my options premiums are pretty low, and really the reason for that is I kind of have a system going. I like to get deltas between 0.15 and below, so 15% below. So what that really means is that of like the within 8 stocks or something like that, or maybe even like 10 stocks, you'll get assigned 1.5 to one of them, right? So that's not too bad. And also additionally, I have the back testing that shows that those stocks that are within this band of the moving average or percentage from the moving average tend to perform pretty well in terms of like volatility and whatnot. So they should expire worthless. You know, I don't mind getting assigned. You know, obviously I could have been more aggressive on it, but you know, there's this risk of being assigned, especially in a market downturn. Um, no, you don't want to. I definitely want to get assigned stocks, but I want to get assigned stocks at a really good price. Uh, and so this is kind of my methodology. Maybe I'll get a little bit more aggressive. Maybe I'll stick with more of an average of like 0.15 deltas. And if you're not aware of what the deltas mean, this is kind of a rough estimate of the chances of you getting assigned or the strike being in the money at expiration or you getting assigned. So that means that there's a 15% chance here for the 46.5 next week to be assigned. Um, you know, it's not very high, but you know, obviously there's going to be volatility. It could go all the way down here and then come back up, or it could go up there and not even be does not even be close, or it could stay flat. So there's a lot of volatility, and typically I just like to get something around um, 0.15 to 0.07. In terms of volatility uh, and premium. So, obviously you're not making quite a lot of money, but, it's kind of a safe process to do it, just very consistent profits. So let's take a look. So those are my wheel plays for this week. So let's take a look at what came up yesterday. And I can't do a daily update because I just don't have time to do it with my other obligations. But I can do it now and then. So let's see. And this stuff I'm still learning, so we'll learn together. So BABA, So I'm looking for. So this work just a quick recap. It basically shows uh, interesting stocks where the open interest or the volume is greater than open interest for that day, and I'm looking for stuff that's out of the money and expiring 30 days or more. So for BABA, and this is the data for Friday, 11/13. Um, so it's showing. So basically, it had bad news based upon China's cracking down on BABA, Alibaba. So it's showing. Yeah, it's actually. This is actually to me. Seems pretty bear. Not bear. Sorry. This seems pretty bullish. So this one I don't think is a bullish call. I think someone is just shorting that. So 63 days. It doesn't think that it's going to get back above the highs there. And, there's just shorting for premium. But for the rest of these two, they're dated in, 2022. Yeah, these are I think these are bullish calls um, on the market, 61%. So, base, you know, around 5.7 million. So this is probably a short. Let's see, CYRX. So I'm not familiar with CYRX. So okay, so okay, 21. I feel these are uh so this one's probably a short, 61,000 short here. Shorting the 75 calls for December because I don't think it's going to get to 75. That's the high. It's a red day on a green day market, on a green day on the market. Yeah, so that's definitely a short. So how would you actually play something like this? The difficulty is that the premium right there, there's a big spread. And I actually think whoever is doing this is basically just shorting naked calls. Um, I think there's people in the market that are so sophisticated and comfortable with risk that they're just willing to short naked calls. Um, so definitely CYRX will be below 75 at 12.18. So how would I actually play that? Let's take a look at the options. And this is after hours, so obviously the spreads are gonna be kind of nasty. CYRX, so 75. Okay, so See, that's really hard. Like, if you do a spread here, a credit spread, 75.80, that means it's like what, 130, 70. So you're getting 70 cents for $500 of risk or $430 of risk. So that's like a 1 to 5 ratio almost. Maybe, maybe not. Obviously, you won't hold it all the way. Most people, what people do is they put the spread on and then they put a stop like 2x or something like that. So it'll never get to that 430 max loss. So it's possible. It really depends on what the market gives you on Monday if you do that. Yeah, maybe. So that's possible. And I'm looking only at the ones that have three or more because I believe that's kind of what shows significant. There's something going on in that market. So NIO, the really big, it had a really NIO is a Chinese EV manufacturer. So it had hit a high of 55 on a pretty big red candle there. And you take a look at that candle compared to all the other volumes, that's pretty high. Um, so there's a mix of long dated and short dated calls. So the short dated calls 18th and then 24th of December are for the 55 and the 60. So 55 is right at that high, and 60 is, obviously a little higher. Um, yeah, it's possible. I think it's definitely possible for maybe let's let it come back a little bit, and then I think the 60 mark would be a really good short here. And obviously for long dated, you know, they're thinking that's gonna go up a lot more. So PBR. This is a not a U.S. stock, so I'm not interested at all. Solo. So I don't. This seems like a okay. So this is definitely not a U.S. stock. Let's see what the profile for this is. So EV. Okay. So it's a Canadian stock. I guess it's not that bad, but so it spiked up. So recently the market has been pretty hot on EVs and Chinese EVs and Chinese stocks and EVs in general. So that's quite a number there. There's some really long outdated calls for 7.5, 7.5. So this huge tail here. So it's thinking that this is not going to go above 7.5, but this is so volatile that you definitely need to have a spread for this. And I'm just curious what the spreads are, because for some of these stocks that are, pretty new or not really traded that often, sometimes okay, the spreads are pretty decent. So well, actually, no, not here. Okay, 7.5 to 10. So that's 250 of risk. So that's like one. This is like 130, and that's like 90. So that's 40 cents for $210. Let's just say 50 cents for $200. So it's like a 1 to 4 ratio that it's not gonna go back above. Yeah, I think I would bet on that. Look at this topping tail is pretty pretty high there. What the hell happened to my volume? Hang on 1 second. Like the volume just like disappeared. Okay. So that's pretty high volume. That looks I think that's pretty bearish. I would do that. Like I would if I think that's a pretty good short right there. Short of 750. Of course you're doing a spread on this and you have a stop. So these plays here that I'm going over as compared to the ones on the wheel. The wheel is very, very different from these. This is I will call a speculative play, a 50-50. Hopefully with this analysis a little bit more than a 50-50. Um, but I would say this is a speculative play. This is very, very different in terms of trading the market. I think the wheel is probably one of the best strategies in the market at the moment. especially if you're starting out on options, uh, because it breaks, you know, as I mentioned before, it breaks the wheel of like probabilities. So here, like, if I do this, right, there's a certain probability that's assigned to doing that credit spread, and then if I have a stop on it, obviously that creates another probability. So overall in the market, if you're kind of just guessing, not guessing, but even if you think you're not guessing or you're doing an educated guess or doing some type of analysis, I believe the market and these volatilities and these percentages always kind of equal themselves out in the long run. So you might have a couple winners here, a couple losers there, but the probabilities will make you kind of flat overall. Um, but I'm hoping with this analysis that we are a little bit more accurate than 50-50 so that we beat these probabilities. But when you have the wheel, you actually crush or you break the wheel of the probabilities.